Hi, everyone. I am Maddie Yaka.
And I'm April Pancoast, and we are the Pancoast and Yaka Group, your local Chester County realtors.
And we are back for another installment of our interview with an industry professional. If you found the other ones helpful, make sure that you like this one and you subscribe so that we know that you are finding them useful and that you don't miss out on future ones.
This morning, we are sitting down with another industry professional who just so happens to be our sister. So welcome, Susie. Thanks for joining us this morning.
Thanks for having
Tell us
me.
a little bit about yourself.
Yes. So hi, everyone. I'm Susie Pancoast. I got my CPA when I was 22 years old, so I've had it now for 8 years. CPA stands for Certified Public Accountant, so I've been in the industry for quite a while. I have my master's in accounting as well. I recently actually got out of public accounting, but I'm still up to date on all the rules and regulations. So Maddie and April asked me to come and discuss the difference between designating yourself for tax purposes as an LLC or as an S Corp for real estate agents.
Awesome. Thanks.
Yeah, so let's dive on in. Can you tell us about the difference between an LLC and an S Corp?
Sure. So an LLC, so everyone knows, is an actual legal business structure. So when you choose to make your business an LLC, you can still pick what you want to be taxed as. That is the benefit of being an LLC. So you can choose to be taxed as a sole proprietorship if you're solo, a partnership, a C Corp, or an S Corporation. For an S Corp, this is just a federal tax designation and not a formal business structure. But doing this allows you to take your income and pass it through for tax purposes. So you won't be getting taxed at the S Corp level. It will actually flow through to your individual return, and you will be getting taxed on your profits and earnings at that level, which helps you avoid corporate tax rate, which is 21%. It is important to know that an S Corp is just a tax designation and an LLC is actually a legal entity structure, because this means that you guys can be LLCs that choose to be taxed as an S Corporation.
So I think that's where a lot of people, when they just get into the business, get a little bit confused, and you're always trying to Google things on the internet. So it's great to hear that in layman's terms from someone who is in that field.
So as a 1099 or an independent contractor, which most realtors are, which way would be more beneficial to file, do you think?
So I feel like that's a very difficult question because there is a lot to take into consideration, but I feel like the main points that people usually consider from a tax perspective when we're giving advice on which to do would be the fact that filing as an S Corp typically helps you save on your self-employment taxes. The reason that this happens is because the way that it's structured. So if you're an LLC and all your income passes through to your personal income tax return, you have to pay both halves of the Medicare and Social Security tax, which ends up being for 2023 15.3%. Whereas a W-2 employee, somebody like me who works for a company, my employer is obligated to pay half of that for me. So I only pay half of the 15.3%. When you're an LLC, you pay the full amount of the 15.3% on the first $160,000 of your income. When structured as an S Corp, the benefit of that is that the owners have to pay themselves a reasonable and fair salary. So on that salary, you will be taxed at 15.3% because you're self-employed. But at the end of the year, you can distribute out the extra profits over your reasonable salary. And these extra profits do not get taxed, a self-employment tax on them.
Which is the way to go.
15.3% is huge.
Do you guys want me to give like an example so that people can kind of understand it a little better?
Yeah, definitely.
So if you're an LLC and you make about $100,000 a year, your self-employment tax would be $15,300. So if you decide to incorporate as an S Corp and your reasonable salaries, let's say $70,000 for the year, your self-employment tax for the year would only be $10,710 because it would only be on that $70,000. The rest, the extra $30,000 in profit would be distributed out to your personal income tax return and not have self-employment tax on it.
Yeah, thank you for putting that in numbers and like nice, easy numbers, because I mean, people like examples and there it is.
Made it way easier to digest, because I've been trying to learn about LLCs and S corps for a while now since we got involved in real estate, and I feel like there's a whole lot of like mumbo jumbo out there that's more for people like you to understand and not easy for people who are not deep in the tax world to understand.
Well, that's what I was going to say. There's actually like a lot more moving parts that come with that. So I do suggest talking to your CPA before just going in there and being like, I'm going to save money on this, because if you're an S corp, like there are stricter rules you have to abide by. So it can be more difficult. And on top of that, you have to pay a payroll company because you have to get actual payroll done. Most likely your CPA fees will be higher because S corp returns are more difficult to handle than partnership returns. So there are other factors that go into it, but it really can help save you a lot of money on your taxes.
Yeah, which is what everyone is always trying to do.
Yeah.
That's why I have a job.
Yeah. So our next question for you, talking about saving money, what are the most common expenses people should be keeping track of?
So a lot of common expenses that real estate agents have, first off, I feel like, business use of your car. How often are you guys using your car for business purposes, right?
All the time.
Yeah. So it's good to know this because you really need to keep track of the miles that you drive for business purposes. How do you guys keep track of your miles? Do you use an app or anything?
Yeah, we use Expensify.
Which is a great example. Like, so there's two methods to take this on your tax return, a simplified and the real actual expense method. So the simplified method is just that the IRS gives you 65.5 cents for every business mile you drove throughout the year, or you can keep track of your actual expenses like fuel, registration fees, maintenance, all that. But either way, to take your actual expenses, I would also need to know your business mileage to get a percentage of those expenses to take. So if you drove 15,000 miles in business miles for the year, but had 30,000 miles overall, I'd only take half of all those actual expenses. So either method, I need to know how many business miles you drove for the year to be able to take that on your return. Other things go ahead.
No, I was going to say, okay, yeah.
Yeah. Other things people overlook, like, I know everyone knows about the home office expense. That's not really something you need to keep track of all year. We could talk about that later. It would be easier if you did keep track of it all year, but something people overlook a lot is like credentialing or continuing education expenses, license expenses. All that stuff can be taken on your return as a professional. Uniforms, so business clothes, and another big one people get confused. So meals are deductible, entertainment is not. Business meals are. What'd you say?
That was changed in the past couple of years, right?
Yeah, it was changed. I believe Trump changed it.
Yeah.
So people still ask about that, thinking entertainment's deductible. It is not.
Well, I love to eat food, so at least that is still deductible.
Yeah, so that was really insightful. But as realtors, what can we do on our end to help alleviate like tax season stress off of our CPAs? What can we do to make it easier for you guys?
Yeah, so I feel like a big thing is
not be a procrastinator. Number one.
1,000,000%. Like, I don't think people realize how many clients we are dealing with during busy season, and a lot of them are getting their stuff to us, late February, March. Any CPA is probably working 7 days a week at that point, and I would say I've seen people work 60 to 120 hours a week, anywhere in between there. So if you really want your stuff done, and like get a quick turnaround, I would suggest getting it to them as soon as possible in January, because a lot of people do procrastinate and we're not getting stuff till later. Another big thing is I feel like people as a CPA expect me to like have this information for them when I don't have access to like what you've been doing all year. Typically, if there's like a tax law change and I need something else, like I'll let you know ahead of time, but you're gonna need the same stuff for your accountant every year. It doesn't change. Like I need your expenses. It's gonna be the same thing. So I feel like after year 2, you guys should really know what to get your CPA. And this will even help benefit you guys, because the more stuff that you give us, it's like the longer it takes. Like I've had clients give me like an actual box of files, and I had to take hours to sort through this box of files, and then I have to pick out what actually pertains to their tax return, and then I have to scan it into the system and then make the work papers like on the computer, because that's how they're done nowadays. All that, like firms typically charge you by the hour. So the longer it takes me to get through the information, the more you're going to be charged on the back end for your return. So I feel like after a year or 2, you should know what to give, and really it benefits me, it benefits you, and you end up getting a cheaper bill at the end of it, you know?
Yeah, I feel like there is some like muddiness in the water though when it comes to what to give your accountant. Like, I don't know, coming into this, we didn't have like a great accountant right off the bat, and they didn't tell us like all of the things that we could write off and what they needed us to give. So this year, I feel like we've really taken it upon ourselves to make sure that we're getting all of the info, because not every accountant is giving you a list like, hey, give me what you're paying on your monthly mortgage so I can write off part of your home office and your car insurance and all that stuff. Like I've never had an accountant give me a list and break down like, this is what I need to write everything off for you. So I feel like there's some work on our end too to figure out like what all we need to hand off.
Well, I feel like, I mean, hearing you say that is surprising, although it's like not surprising because I know of your experience, but it's surprising because, yeah, every firm I've been at does have that list, because like I said, it's the same expenses. Like the tax law doesn't change, and when it does, we know.
Yeah.
So like I've always given clients that list and have explained to them like what they need to give to us. But I think that just goes back to like, make sure you're picking the right CPA to do the job, like really research them. And even when you think you have a good firm, talk to the partner or the person who's signing you to the firm, and make sure they're not just like assigning an intern to your tax return, and like you're getting all the proper information that you need. And I feel like people are like a little afraid to push back against their CPAs because they don't really know what they're talking about. But seriously, if something seems wrong, definitely push back. Because like, April, I know that you like paid double tax. Like if you get a large tax bill you're not expecting, you need to be asking your CPA, please sit down with me and explain this, because you weren't expecting it. You told me not to expect it, and here it is. So like, what's wrong?
Yeah, when you've saved 30% of your
Share
earnings.
share your story, just do it.
Okay, so our first year in real estate, we were using an accountant. We didn't, I mean, it was somebody that somebody knew and used for years, and that person retired and handed all their accounts off to a newer CPA. We were pretty green in the business. We didn't know that we should be doing all this research into our accountant, and I got royally screwed. My accountant double counted my income, and even though I'd saved 30% of what I made that year, I actually ended up owing double of what I had saved, so about 60% of my income. And how old was I at the time? 23. So it was like one of my first times filing taxes on my own. One of my first times doing it as an LLC, as a business, and I had no idea what to expect. It was my first time as a 1099, and so when he told me that is what I owed, I paid it because I didn't want to get
I think the quote that sticks with me from you was like, if this is what it feels like to make $100,000, then
I don't want to.
oh my God, it's horrible.
Yeah. So it was rough. And like had put on my tax return like some of Mike's information. We weren't even married at the time. He had me working at Tri-M. I'm like, I'm not an electrician. Like, why is this on my tax return? So yeah, choosing the right CPA is very, very important.
Yeah.
For everyone watching, I told April I would check her return and everything. This was not my fault.
Yeah, this is the first year I strayed from Susie doing my tax returns.
And we got down to the line because it was our first year, but in the past couple years, we've been great in getting our information to our accountant by January.
Yep.
We've been on top of it. I don't procrastinate. So each month it's in the QuickBooks at the end of the month. But
Yeah.
Susie, I guess to wrap this up, April kind of shared her craziest story that she's dealt with a CPA, but like as a CPA, do you have any interesting, crazy, sad stories?
Don't say sad.
So I kind of had to think about this for a while because I can't really talk about much. But I do have a story just to give some perspective into like what it is coming out of college to like work at a Big Four. So I think it was my second busy season. So I think it was like my 24th birthday. And I was on a client out by mom and dad's. And we were working, obviously. And Alex, our younger sister, came to drop off cupcakes because it's my birthday. But you know, she procrastinates everything too. So they didn't drop them off till like 9:30 at night. And mom and dad were texting me. They're like, "Are you still gonna be there?" I'm like, we're just getting started. Like, still gonna be there? Yeah, we'll still be there. So they come and drop off the cupcakes at 9:30 at night. I give them to my team and everything. Some of our higher ups were in a meeting, and when they came out, they like had cupcakes. And after a while, like my one manager came in and was like, "Susie, I didn't know it was your birthday." By this point, it's like 11:30 at night.
You're like, I got 30 minutes left.
I'm like, well, yeah, it still kind of is my birthday. And she's like, "Oh my God, happy birthday. You know what? You deserve it. Pack up and leave early. Enjoy the rest of your day." And I was like, "You're kidding." And she thought I was like literally asking like, "Oh my God, you're kidding," like excited. I was like, you must be joking right now. And she's like, "No, really, pack up, get out of here, go crazy." I'm like, all right, whatever. So I get home. The client's like an hour from my house. I get home around 12:30 at night. I like took a bath just to try to relax. I didn't get into bed until probably 1:30, maybe 2. I was waking up at 5:30 for the gym because when you're working at a desk for 15 or 20 hours a day, you want to make sure you get to the gym in the morning. So even though I'm deadbeat tired, I'm waking up for the gym. I was asleep for maybe 3 hours that night. My phone had gone off with emails from that manager because she could not find a work paper that I was working on because like the database didn't sync before I left. She's like, I had like 20 emails from her. "Where is this work paper? Why did you leave without this work paper?" 3 hours I was out of contact. When I got in the office later that day, I got chewed out for not responding to my email quickly enough.
At 3 o'clock in the morning.
At 3 o'clock in the morning, yep. So it was a birthday to remember. And that is when I was like,
And now you're like, I am no longer at a huge Big Four, stepping back a little bit and much more relaxed.
I should definitely clarify the place I'm at now is great. And this story is not anything to do with the company that I currently work for. I love my job now.
Yeah, that's awesome.
So,
Well, everyone, if you have any questions about LLC, S Corps, being a 1099 employee, or what you should write off for your expenses as a realtor, drop your questions in the comments or ask your CPA. And if you found this interview helpful, make sure you like it and make sure you subscribe to our channel so that you don't miss our next interview with our next industry professional. Susie,
Thanks so much for coming
thanks.
on.
thanks for having me.
See you, everyone.